you listened in on the Tesla conference call last night? I did not, but I'm told they're always kind of an interesting and let's just call it wide-ranging affair. What was your takeaway, David?
It was my first conference call with Elon, Brian, and I got to tell you, it's different. You find yourself inside of Elon's head as he ping-pongs back and forth from one subject to the next. At one point, he was arguing with himself over some design issues and engineering problems. I think that went over the top of the heads of a lot of people. I know for myself, and I think for portfolio managers with an analyst background, we're probably at a disadvantage because we're forced to discount and look out a decade. This is a company with the vision thing, and Elon certainly has that. When he talks about reshaping the future, and it's intoxicating. And you find yourself looking beyond, some of the other issues, the mundane issues like valuation. Maybe the most interesting question on the call was when one analyst asked Elon, what could other car companies do to catch up? And he said, what can they do?
And what's the answer?
I don't know. I don't know at this point. At some point in time, these other companies, they have legacy issues. So obviously Tesla has a leg up on this. I think the biggest knock on this company right now is in the automotive section and the dependence on the emission tax credits. At 397 million for this quarter. For the year, that's up 196%. And that's not sustainable because at some point in time, these other OEMs, they're going to be making their own electric vehicles and they're not going to need those credits. So again, they have to concentrate a lot on getting that bottom line profitability real. And that's in part why they didn't make it into the S&P 500 last quarter.
One wonders, we all talk about the move to electric vehicles, David. One wonders if we're going to make a move to EVs or just a move to Tesla. Because if you look at registrations, okay, I said this yesterday, Car and Driver magazine has it this month. The number of registrations for Model 3 Teslas is more than all the other electric vehicle sales combined. And some of these numbers are dismal. I mean, you look at the numbers from Jaguar and Audi, and I'm not picking on those companies because their products are nice looking and well built, by the way, but they're selling a couple thousand cars. I mean, are EVs the wave of the near-term future, or is just Tesla its own thing?
For the bears, the one thing that bears held on to for such a long time is that there would be competition, but everybody seems to be going for the Tesla model. The Model Y is a big car for them because that one has a higher average selling price, while at the same time has the cost structure of a Model 3. And this, failure of the bears to make a dent here is in part why the shorts have just collapsed and gone away. At the start of this year, I remember looking. Short interest was 10 days to cover. It's all the way down to 1. They've thrown in the towel. One thing on the call, there was no blockbuster announcement. The stock really did nothing last night. It was at 437 at the start of the call. It ended the call at 437. Yeah. I think the bulls were looking for more on autonomous driving.
Shepard Smith here. Thanks for watching CNBC on YouTube.